I keep getting trapped in this mentality of there being a staple name that hasn't done anything in 5 decades, thinking miraculously a Ford Bronco is going to lead them back to the promised land.
Stupid. I mean, that's not true. If you look at what Ford's done in the last 3 months, it's rallied hard off of its lows. It's just, you know, you could even make the argument that Ford has broken a multi-year downtrend, which is what I think.
I'm not seeing that.
Yeah, look at Ford and then look at Dow DuPont, just like the long-term chart.
I'm liking Dow DuPont way more at this point.
Yeah, but it's a similar thing where they were trending down for years, and it seems like, at least now, and Dad, I know after we were off of this yesterday, I was asking you about like different key levels for Ford where you would change your mind, and I'm with you. I mean, I'm down money on Ford, and I own Ford now too, but it does kind of seem like there's a good chance that they might have broken out of this multi-year downtrend. And if that is,
I want to meet their PR team, because these guys, I feel like for years I've been hearing, even Dan at that convention we were at a year and a half ago, Ford had this great campus with all these futuristic things going on. They have people working on self-driving. Meanwhile, Tesla just goes through the roof ongoing, and they're falling apart. It seems like a tale of two different narratives. And they're, you know, I get it. It's Ford, like they're not going under or anything. I don't know. I'm not liking it.
I still think Dad's original thought of, and if you have the bankroll and the time and the stomach to do it, the concept of shorting a Tesla, buying a Ford, shorting a Peloton, buying a Planet Fitness, shorting an Amazon, buying a Walmart. And I'm not, first off, I don't like the Amazon one.
Yeah.
The other ones I do like. And I don't know what the timeline is on that, but you know, I was thinking about it this morning.
You do have to have deep pockets.
I would not be shorting Peloton right now. I think work from home is with next level execs. When you think about like people with disposable income that are, for one, buying Pelotons and what they've done with the lower tier pricing now, I would not. I think that company has way more room to run with this shift in working from home. You even saw Salesforce. Benioff came out yesterday. They extended work from home through June 2021. So I don't really think, I'm not saying Planet Fitness isn't a good buy, but when you look at a Peloton, I actually think they're just set up now in an amazing way, just based on where the world has shifted, for them to just continue to win.
Yeah, I mean, the one thing I'll say about Peloton is it's not like one of these companies where there's no chance of competition that could easily derail them. Like when you look at
I was going to say, isn't Apple going to be competing with them?
No, I think Apple will buy them, if anything, at that point. Like, it's one of these
companies like that.
Dad,
like Apple
that until they do. They're a service company now.
Apple's never bought a company anywhere near the size of Peloton, let alone half, 25%, 10%.
Doesn't mean they won't, though.
The biggest company they've ever bought is Beats by Dre, which was like for $2 billion.
I think with what Apple's so big in healthcare investment, it would not shock me with what they've done with the Apple Watch and where they're heading with Fit, the wearables. Peloton, to me, is a perfect synergy.
They don't buy companies like that.
Until they do. Like, that doesn't, that's whatever has happened in the past to me, it's called history for a reason. That doesn't mean it can't happen in the future.
No, it can happen, but it's not their style.
This is why I don't pay attention to trends in the past.
But Apple just bought a company in Israel in AI, a small little company that's going to help them with their cameras. And, this is the kind of company that they look at.
Yeah, there's no way Apple drops $40 billion on Peloton. It's just, they just don't do that type of thing. And you could use history to kind of show what a CEO like Tim Cook does. It's not like
he might value, when you look at like actual user data on health, like when you look at the Heart app on iPhones already and what Peloton's been working on, he might look at that a bit differently with how much value is put into that with what Apple is even focusing on now. Let's keep in mind they're not just a product company. So
let's change gears here for a second. So yesterday, it looked like there was a couple of vaccine headlines that like came out last night, kind of talking about how, it looks like there might be vaccines as soon as October. I think Pfizer came out with something. I think there was 2 things. And today, market looks like it's going to be down, which I thought it was going to be down yesterday. I know it's OPEC week, and that always has some sort of pull in the market one way or another. Dad, do you want to talk about that a little? Like, what causes that to move the markets, if anything?
Well, first of all, I think you can't ignore the dollar when we're talking about the market now, and the dollar is actually up 0.5%. So if you see how much the market's down, it's pretty much a wash. So when you think about Europe, and we come in and Europe's been trading, they're looking at the U.S. market as pretty much flat, while we're looking at it as down.
Interesting.
And as far as OPEC goes, I mean, we'll see what they do. I don't know what they're saying they're going to do this time, but whenever they talk about a cut, that's good for the oil stocks. And I don't know if they're going to cut or not. I don't know what the politics are on it, and I haven't been following it. But you're right, it does have an impact short term when they're involved.
Then yesterday, Tesla over 2,000, I think, and I could be wrong here, it could be today, but I'm pretty sure that yesterday was the day that you had to own Tesla by in order to be in by the split. I've heard something about that. I know like the Canadians were talking about that on their show in the morning. I don't know if it was yesterday or today, but there's something going on where even though the split with Tesla isn't happening for whenever it's happening, I think there's something about needing to be in the stock basically by yesterday if you wanted to be in for the split price. So I don't really know.
I don't even know what that means because it's splitting on August 31st. If you buy the stock tomorrow, you're still, whatever you pay.
Yeah,
I don't know.
Talking about.
I just know that there's something.
Sounds like something the shorts would. I mean, the longs would put out on Tesla to force people to buy it.
It's funny how many people I think of a stock split as something completely different than what the actual stock's trading at. It seems like there's so much sentiment around it just being a discount, which is pretty humorous to me.
It's insane. It's insane how Tesla went on ever since they.
Like I have friends that have hit me up about that with Apple and Tesla. Like, oh, finally, I can get in this thing. It's like, what are you talking about?
Yeah, well, that's why I guess Apple and Tesla have been going through the roof. And it can't be good once the split happens. I can't imagine it keeps going.
So maybe that's the trigger of a sell-off coming.
Well, for those two stocks. I mean, I was dead wrong on Tesla. I still think it's going under 1,000, and it's.
And Dad, it'll be going under 2,000 this time next year. That's what it'll keep going down another 1,000.
Yeah,
I love us to have video footage of like over the years how many people have said, "Oh, once Tesla does this, I would short it here," and the targets keep going up. It's funny seeing these bears that have keep pushing these price targets up. Even Kramer had to have a religious experience to turn into a bull, and Musk reaming him out into a new one, and now all of a sudden he's a huge Tesla guy. Because his daughter was like, "Oh, there's something about these cars." It's just funny how
it doesn't matter. The cars have nothing to do with it anymore. I mean,
what I'm getting at is he's gotten in everyone's psyche at this point to the level of it's Tesla. They're like God. It's hard to bet.
One thing I say about Tesla is it seems like a lot of people look at them as a technology company and not a car company. And if that really is the case, then you could start to wrap your head around the current valuation.
Yeah, and they are a technology company. You've wanted a Tesla for how long now? Think about how you've talked about a Tesla. Have you ever talked about that with any other car company? No, because it's not a car company.
Well, to be honest, I've kind of sort of been talking about it in a similar way with the Ford Bronco.
That's because you've been on the stock. That's not. You've been infatuated with Tesla in a way.
I became infatuated with the Ford Bronco months before I bought the Ford stock.
Yeah, I know, but Dan, you've talked about Tesla in that for years, like in an infatuation way, which is why they're not a car company. When you think of it that way, it's just a different ballgame.
Yeah, I mean, look, I'm not going to short Tesla. I'm not going to buy them at these levels. I almost bought them, Mike, remember like a month and a half ago? And I was like, I feel like I should buy Tesla here. I feel like before we know it, they're going to be like well into the thousands. And I didn't, and now they're at over 2,000. That was when they were at like 850, but I didn't.
Well,
I've never
get on them when they dip to 1,800, and then you can ride them till 3,000.
No, we can argue about Tesla till we're blue in the face. There's people that think it's going to 3,000. There's people that think it's going to 500.
Yeah, that's
so
the beauty of the world. Everyone has an opinion and an asshole, right?
Yesterday in the morning, and I ended up being wrong, and now I'm even on it, and I'm probably going to just sell it because I don't know. But I bought some SPXS just thinking that yesterday, the market looked like it was folding over, and then when it like came rallied a little.
What symbol did you buy?
SPXS.
Oh, okay.
Yeah, which triple shorts the market, and I was not loving that yesterday because once the market turned green, that's when I bought it because I thought it was going to go back negative. I thought it was a weak day, and it didn't. This morning, I'm basically even on it right now. I mean, to be honest, it wouldn't. There's nothing the market could do that would surprise me. Like, this market is so hard to figure out because anytime it feels like it's going to fold over, it does the exact opposite. Anytime it feels like it's going to rally hard, it folds over. I mean, this is just, and I know we've talked about this several times, your best way of making money in this market would have been to just take a vacation for a month and let your position sit, assuming you're in the right ones, and not really do anything. It's just, it's tough.
I've been treading water because, I have a few names like Apple and Microsoft, which keep me above board, but the banks are just continuing to be weak. You talk about Ford, and is this stocks to continue to deteriorate into the strength of the NASDAQ?
Uber finally popped yesterday.
Well, they got a temporary, I guess, injunction on.
Of course, they're not. That whole thing is not. Let's be real. There's too much money behind these companies with that California thing, and most of the drivers don't want to be employed.
So if that doesn't happen, that to me makes Uber and Lyft great buys right now because
they're phenomenal buys, Dan. I'm annoyed I didn't buy more under 30 with Uber. When you look at that support level,
it still comes down to the vote in November on that.
The world rigged.
I'm kind of with Mike. I don't think anything changes because I don't necessarily think the policymakers realize that the public wants things to be the way they are and how many people are employed because of Uber and Lyft and how many lives they would destroy if they actually went through with that ruling. So I find it hard to believe people are going to vote to try and remove Uber and Lyft from California, which is what they'll be doing because those companies aren't set up to employ anyone. So, yeah, I mean, I don't really think that happens. And I actually bought Uber at 34.70, so I'm down on it. I'm thinking about just cutting my losses. I've been trying to be way better about cutting my losers and riding the winners. Like, when stock starts to slide, I'm just like, who knows how long they're going to slide. Like, maybe Uber goes down to 22. I don't really know. But all I know is when I bought them, I thought that they were going to be going up, and I was wrong. They've been going down, and I don't want to keep averaging down. Like, I used to love that strategy, and now I don't as much. Now I'm more, when I buy a stock, if it validates my thought process and starts to go up, I'm more tempted to buy more because I was right and the stock's going up. If it's going down, I was probably wrong, and who knows how long it's going to go down for. So that's just.
And it's still the bottom line with Uber and Lyft, more so with Uber, is they're not making money per transaction.
They need self-driving. Again, that's where they make money.
Whether they need it or not, they're not a profitable company. So you got to keep that in the back of your mind when you buy these things. If it wasn't for the amount of money they've got on hand, they'd probably be bankrupt.
But they do have the money on hand.
Yeah, but it doesn't make it a good company on owning the stock.
Yeah, I think Dan makes a good point because when you think about all the other companies that are in technology that are also growing at these enormous levels, even more so than Uber, and are reaching profitability, it's like, why buy Uber when you could buy a PayPal or when you could buy, an Amazon or a company that's just proving itself quarter after quarter, as opposed to buying a company where profitability seems like a pipe dream. And sure, if they ever do achieve it, it's not like all of a sudden the stock's going to be $500 a share. Like if you see there's a path for a company like Uber to really be crushing it, you'll have time to get in. And that's also what I'm starting to think with, like, when you really think about trying to time a rollover if the market's going to go down, you might as well, like, really, really wait for the moment where you know for sure the market's going to go down. And yeah, like maybe you're selling and getting out and shorting at points that are lower than now, but to try and time the market and time the top just based on these little tiny dips, you'll kill yourself over it. It's crazy.
Or you just get out now and wait and be happy with how much it's run up and have money on the sidelines until a pullback. There's nothing wrong with that.
Unless this is the beginning of a real rally. When you think about it, like all we've done in the last 6 months is essentially get right back to where we were. So, and you might be right. Maybe the market folds over. Maybe the market has a way of making people feel like fools. You sell everything now, and 2 months later you buy completely back in because you see the market rallying out of control, and you start justifying in your head like, oh, I was wrong, the new levels are this, and then it drags you in, and then it sells off.
Well, we have to just know volatility is going to naturally pop up here with us being less than 90 days from the election. That's just normal.
Yeah, and I think there's going to be more and more people trying to figure out a strategy on their. There's a lot of people with tremendous capital gains right now, and they have got to make a decision if they want to take those in 2020. And part of the strategy may be selling calls for December or November, which comes out after the election, selling, like a covered call. Because then they can make the decision, okay, Trump wins, I can cover my call option and still be long the stock and not worry about the capital gains. Trump loses, I cash in December or November based on the calls, but you're right, and pay the capital gain this year. I think there's going to be a lot of that kind of thing going on in the next month or two before the election. Because there's no question if Biden wins, the Senate's going to go too, in my opinion, and they're going to raise capital gains to ordinary income levels. And that's a huge hit for people that have capital gains, long-term capital gains. That's like a 20-25% hit.
Well, yeah, I just won't be I won't be selling any stocks at that point during that idiot's rhyme. Like, that's all.
Well, the point is, if you could lock in a profit this year, you're saving yourself on taxes maybe as much as 20-25%.
So naturally, you're saying there'll be a big sell-off then from that happening.
Well, I think people are going to do different strategies to protect against that. They may not want to sell those stocks now in case Trump wins. So the way you protect yourself is to sell calls. And
it's a tight race, so it's hard to really know at this point where that's heading, really.
And wouldn't you also say,
what's up?
Wouldn't you say, though, no matter who wins, if anything, if Biden wins, there's going to probably be even more stimulus. Is there a chance that more stimulus?
There's no question that there'll be a stimulus, and that'll be good for certain sectors of the market. But I'm talking about people's personal situation, having long-term capital gains in 2020, that if they wait till 21 and the tax policy goes through, those long-term capital gains are going to be treated like short-term capital gains. And that's a disaster for people that have. There's people that have millions of dollars locked into these stocks for years. And it's a big decision to figure out here.
That's going to be an interesting thing to keep an eye on, what happens with that. Because I'll tell you, last night I watched the Democratic convention, and I watched it because I was really just curious to see Biden's speech, because everyone keeps saying, the guy's out to lunch, can't put a sentence together. And it was a damn good speech in terms of, it didn't seem like he was out to lunch at all. I was shocked, actually, because I was watching and I was waiting for that fumble moment where he just completely lost everything, and it never.
Yeah, but don't forget he was reading it.
Yeah, I mean, what are we talking about? The guy was reading off of a teleprompter, so he's not blind.
I know, and you can kind of see that. But all I'm saying is, in the last few months, there's been a lot of moments where it looked like he couldn't even do that. And I'm not.
I mean, Dan, he needed a script to congratulate his VP nominee over the phone. So I don't know.
Part of the game, though, part of the game and the strategy of the Democrats, make this guy look like he can put a sentence together, and then when he has a speech, everyone says, what a great speech, because he got through it.
I can't wait for the debate.
So there's only upside, right?
There's not going to be a debate.
Yeah, there is.
What do you mean? Of course there will.
I don't know. I feel like it's not going to happen. But
it'll happen.
It's definitely happening. It's going to be great entertainment.
So something I've just been kind of thinking about, I'm curious to hear your guys' thoughts. It's obvious that everyone's now talking about, call it a second wave, call it a third wave, a continuation, whatever you want to call it. But either way, it seems like people really do think that the coronavirus is here for a little bit longer. And, whether or not a vaccine comes, I think there's probably people being realistic about how many people are going to take it, what the impact's going to actually have. So you look at the reopening recovery stocks, and they had that really, really short-lived rally that was just went nowhere, and they immediately got rejected. And I'm just kind of thinking to myself and looking at the calendar, and we always talk about how markets look 6 months ahead. So I'm wondering if, just in my head, I'm kind of like, all right, April seems like a time where we might really put the coronavirus behind us. We go through a whole other winter of this, and then the election happens. Maybe there's a vaccine, maybe there's not, but maybe by April, just with the seasonality, maybe that's when we start to actually come out of this. And if you look at that, then you kind of have October, November-ish as your 6 month point from there. And I'm wondering,
well, you won't even need, if there's no vaccine, we'll have herd immunity, which supposedly is already here in New York. I saw yesterday walking around, all the college kids are back, which was encouraging for NYU. No one had masks on. It felt normal in the park. It was packed. And from what I'm seeing in the data, we're at that point in New York of herd immunity. I think if there's no vaccine, there won't even need to be one come spring when you really break down the data.
Well, where I was going with this is more if you look at that 6 month timeline, if there's a lot of people that might be circling, end of or beginning of spring, beginning of summer, like that April-May period is when this might actually be behind us. I'm wondering if, October, November might be a time you can maybe get ahead of that trade and try and play those recovery stocks, because there's no doubt everyone was trying to play them in the last few weeks. And for whatever reason, it was a very short-lived rally. If you look at any of those names, they had a little bit of life, and there was
we're heading into the fall soon. That's part of it. The whole cold weather seasons are coming. So naturally, until, like you just highlighted, until spring, it's tough to think of those recovery stocks that aren't stay-at-home as great plays, because I think a lot of people, regardless of all this, are going to be wary about being out and about in cold weather.
Yeah, probably the thing to start thinking about are the infrastructure stocks, because even if Trump wins, let's say Trump wins and the Democrats win the Senate, they're going to get an infrastructure bill done. And the roads are a disaster all around the country, tunnels, bridges, all these things have to be repaired. So the companies that are involved in that kind of thing are probably, if they already haven't started, being thought about.
And does that throw a couple out there, like a Caterpillar, for example?
Yeah, I mean, any of the machine, moving earth.
Ritchie Brothers is a good one. Paul's buddy Matt works for them.
Cement companies. I mean, all kinds of.
RPA, Dan.
Waste management's probably a good one that falls into that.
That's a great one.
Well, waste management does well, I think, when everyone is back to work, more or less. There's more garbage. I mean,
yeah, I think part of the business is like commercial construction, and if they're building new tunnels, new buildings, things like that, they're the ones cleaning it up.
Yeah, I mean, there's a whole slew of companies that'll benefit from that. But that's going to happen, and I don't think the market is ignoring those names. But that should continue.
The market
the other thing I just heard yesterday, that 3 months before an election, if the market goes up during those 3 months, that means the incumbent usually wins, like almost 90% of the time, and vice versa. So if the market goes down in the next 3 months, you could bet Biden's going to win, and vice versa. So it's kind of interesting.
That is interesting. I mean, yeah, that'll be an interesting thing to follow for sure.
And I'm sure that'll happen either way.
I also think that people this has been the type of market that makes you feel like it's tough to be patient. And I know the name of investing is being patient. Like when we talk about names like Caterpillar and names like Waste Management, it's not that hard to look out and think, yeah, in 6 to 8 months from now, or even 3 to 5 months from now, these names are going to have to rally if they are doing anything to try and get the economy back in order in like a realistic way with stimulus bills and things like that. And naturally, it's tough right now to be in losing names when you see tech just day after day. It's like Groundhog Day. Market opens down. Before you know it, tech is up 85 points. Apple has been probably up every day for 6 months straight. It's just insane. I mean, the same names every single day. And who knows when it ends? It could end today. It could end at any point. But it's definitely like it's so hard right now to stay in losing names when the winners are just such winners. And
but the other side of that, go back to the capital gains thing. All these tech stocks is where people have these tremendous gains. So that's where all these strategies have to be put in. I mean, people don't have big gains in the banks, or some of these names like Ford that we mentioned. So you don't have to worry about those with the election as much.
But in saying that, Dad, it's like my own, when I look at the way I've been doing things myself, I've been selling my losers with losses to try and pay as little tax as possible, knowing that my winners.
That's fine in the day-to-day trading. But I'm sure you don't have enough big losses to make up for the giant capital gains. But you're right. People will sell the losers to take off the top ones.
And that's like when you talk about strategy, that's where at the end of the year, if I'm looking and I'm like, okay, I need to make some sales here. Am I going to sell BP and take a nice hefty little loss from what it's done? Or am I going to sell Amazon, which is only probably going to go way higher in my lifetime? I don't know.
Well, part of the problem of waiting till November or December is if you sell BP because you have a big loss against other gains, everyone else is doing the same thing. So BP is an example of a stock that'll probably get hit harder because people are losing money in it and they want to get it off the stage. And that's why in January and February, sometimes you see the big losers have a big uptick.
Gotcha.
That's where it gets tricky.
Yeah, I mean, Mike, you say BP sucks. I still think at some point in our lifetime that stock's trading over $8. And
that's great. But sometime in our lifetime, when we're old and gray, like that doesn't do anything for me.
Yeah, maybe
all I've seen is that stock lose me money the last year.
The one positive about BP is they're going, they want to be completely a green company. So that's kind of
great
into the Democrats.
It's great hearing that, but let's see it in the stock.
And yeah, you gotta see some sort of rotation in just what people are looking at right now. I mean, yesterday, did you guys see? Have you guys been following Fiverr at all? Thing was up.
Yeah, I saw yesterday. They were up big
every single damn day. I mean, today it's obviously probably going to sell off a little bit. 124 is a number I'm looking at because that's its old all-time highs that I got to like a month ago. It's funny.
Yeah, it seems like a lot of these stocks are about. This is all run up a bit crazily. Like in a way where it's just, even looking at Penn Gaming, I'm like laughing to myself. As much as I love it, it just seems like it's ridiculous. Like when you really think about some of this stuff, that has no rhyme or reason behind it.
I agree when you look at like an Apple or a Tesla, but when you look at some of these market caps that aren't as big and you look at the potential they might have, like I was looking at,
that's the thing. It's potential.
Well, no, not just potential. It's what's already happening and what's going to continue to happening as long as they don't get derailed. But like when you look at Fiverr and you look at their chart, and then you look back at Twilio, and you kind of think about what Twilio was and the growth story that they've had, which has been far from fluff. It's completely real. It's one of the top vendors our company uses, and there's a lot of other companies out there. That stock, ever since it was trading at 45, people have been saying, "Oh, it's gone too much. It's gone too much." What's it at now? Like 250.
Twilio, though, I look at Penn more of. There's a lot of great speculation on how they're going to be dominating. Twilio is a different category to me. They're a legit service that's proven themselves in many ways. Penn has a lot of fluff in the future that's going to be great off of hype.
At the end of the day, you know what though? At the end of the day, if we bought every one of the companies that our own company has been involved in, we could have closed our company and made all the money in those stocks.
Yeah.
Right? Definitely. Well, it's right guys.
Yeah, and Mike, I was talking about Fiverr, not Penn, when I was comparing it to Twilio.
Oh yeah, Fiverr is a great play. I mean, it's going to keep growing. But yeah,
and then like the last thing I'll say is I keep hearing all these people say, "Oh, it's the same 5 names everyone keeps piling into," talking about Apple, talking about Tesla. But there's some names that I've never heard anyone talk about, and Fiverr falls into that category. That I can't find a sexier chart if you look at the long-term growth it's had. And until people start talking about it, maybe it keeps going. I don't know.
I'm sure it'll be talked about on one of these Robinhood things soon enough.
That'll be that.
Enjoy the weekend.